Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, July 12th, 5:35 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend since May 6th. Check the trend gauge over here. Market leaders still holding up. Some definitely fell by the wayside this week. We'll talk about what's coming off of the 21 over 21 list, but plenty lined up, ready to take their spot, and a possible whole new crop of potential leaders popping up with the leadership the last 2 days coming out of mid and small caps, and smaller big caps as RSP outperformed the S&P 500 and the NASDAQ 100 again today. So as far as the major indexes go, all five are trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. Wednesday, we brought out this flashing yellow light as the NASDAQ 100 and the S&P 500 were extremely extended from their 21 and 50-day moving averages. S&P 500 not so much anymore. NASDAQ 100 still a bit extended, and still a bit of a risk of more money rotating out of those into other areas of the market. So we'll talk about that as we get through this video. So what happened today before the open? PPI surprisingly hot after CPI came in yesterday, much cooler than expected, but it really didn't stop stocks from putting up some nice numbers, at least for most of the day, as basically the opening 5-minute range was the low of the day, and we rallied strongly in two waves. Before the last 30 minutes, almost a waterfall-esque sell-off in the S&P and the NASDAQ 100. It was led by the big eight, so the RSP sold off a bit too, but not as significantly, which always leaves questions going into next week, what was going on in that late selling. But all in all, on the day, a very strong week. We're seeing the expanding breadth that we've been wanting to see for a while. We're seeing the RSP play some catch up, and mid and small caps breaking out of ranges. There's really not much bearish about that. And sometimes that's reason for concern when everything looks like the coast is clear. The market loves to confuse the masses. And that's why we've always got a plan in place, whether things are going to go higher, go lower, or go sideways. We've got stops for everything in place and a plan for executing it depending on what the market wants to tell us. So here are the numbers on the day. The 21 over 21 list, 15 up, 6 down, up an average of 0.8%. The big eight, only 3 up and 5 down, up 0.2%. So again, we still got some overhang from the rotation out of these big names, but plenty of names to pick up the slack. And these big eight names are so big that it doesn't take much money coming out of them to look like an elephant jumping into a bathtub to prop up smaller names. RG8, this is our 8 growth ETF composite, all 8 of them positive today, up an average of 1.33%. S&P 500 opened up 0.13, was up over 1% at one time before the late selling, ended up positive 0.55%, equal weighted, outperformed, up 0.88. NASDAQ 100 was also up over 1%, pulled back hard into the close, ended up 0.6%, equal weight, outperformed, up 0.9. So there you can see with the equal weight indexes, more of the breadth that we've been looking for, and that's a positive thing. The Dow up 0.6, mid caps up 0.9, Russell 2000 opened up 1.1, rallied a bit, pulled back a bit, still opened, closed up 1.1. Still some short covering going on in that area, and harking back to November, extreme volatility coming off the low in Russell 2000. The question is, are we going to see that again? Global 60/40 up 0.5%, our flagship GROTECTION portfolio up 0.45%. Let's get into it. We'll start with the charts. And since it's Friday, we will also show the weekly chart in the upper right-hand corner so you can see the change on the week as well as the weekly candles for the last 3 months. So starting with the S&P 500 here. So we had the big rally into the CPI report. That was on Wednesday. The big negative reversal when in big caps when CPI when the market opened after CPI on Thursday, and the strong but mid-range close today. We made higher high, so all-time high. Not an all-time high close though. Let's take a look at this on a 15-minute chart and draw a few lines. So uh, look at this. Keep an eye on this 55.90 level. So here's Wednesday, the melt up into the close, into CPI, the higher high after CPI, and then the waterfall move lower as the big eight was sold hand over fist. We based into the close on the S&P 500, opened up slightly positive, and then two strong waves up, a little bit of a base right above this 56.42 prior high yesterday, but not ready to hold it. And you can see the waterfall close, these two last 15-minute candles not looking good. So let's look at the positives and the negatives. The positives obviously is we did bounce back nicely in the S&P 500. It's not off of the backs of the NASDAQ 100 big eight names, however, as they continue to sell off. And we've got a few levels to trade against here. Definitely don't want to break below the lows of Thursday. Those pretty much correspond with the lows of Tuesday. So that's a pretty key level, that call it 55.74-ish. We pull back, we want to bounce ideally off the top of the range that formed Thursday while we were basing into the close. That's around 55.95-ish. So leave some wiggle room. And you'll see this when I get to the day count on the tail of the tape. I can't even really give you a day count right now because of the big bifurcation going on between the various indexes. Let's move next. Let's keep this picture in mind here, the daily chart of the S&P 500 and the 15-minute chart. Let's go to the NASDAQ 100 now. So you can see we didn't come today even close to exceeding the highs from Wednesday, the big sell-off on Thursday, and a big sell-off into the close. So the low for the NASDAQ 100 is well below the lows that we drew for the equivalent time frame on the S&P 500. And this looks like the key level, and that's we filled the gap, and that's good. So it's around 490.50-ish, we'll call it, yesterday's low. That's the area we want to see some buyers come in at on the NASDAQ 100. Let's go to the daily chart here, and you can see the big candle on Thursday, an inside day closing in the bottom third of the range, still above the 21-day and the 8-day moving average. Let's go to very quickly the equal weight indexes for the S&P, and you can see the 2-day big breakout mid-range close today. Take it to that same 15-minute chart. The day count is up too if you go by this. Let's also look at QQEW. Not as strong because, well, tech getting hit along with the overall big eight. It just trickled through. It wasn't only big names, big tech names that got sold. It was some other tech names too, but still an all-time high close and a higher high today for the equal weight NASDAQ 100, and some outperformance, of course, over the last 2 days as breadth did expand into the lower sized stocks in this NASDAQ 100. Let's go next to the Dow, which closed at a very nice round level, 40,000. Poked its head above it to a new all-time high, and this is an all-time closing high, I believe. Let's compare it back here. That was, nope, 40,003 back on 5/17. So just below an all-time high close there. This chart looks fine, however. Now let's go to the the S&P Mid Cap 400. Clear break, obviously, of this downtrend line that we had been talking about, as Connor pointed out in last night's video. Big candle yesterday, up near the all-time high. So some possible resistance here. We saw it today with the reversal and a close in the bottom half of the range. But 2 days up there. We'll keep an eye on what proceeds out of mid caps and, of course, out of the Russell 2000 next week. Again, you can see this big gap up and higher high here. Is it an all-time high? It is not. So, and we're actually at a level where we consolidated for quite a while back here in 2021. So compare that monthly chart of the Russell 2000 to the monthly chart of the S&P 500. You can see how much catch up the Russell still has to play to get to all-time highs. We're at 2148. It's 2460-ish is the all-time high on the Russell 2000. So quite a way to go. Still a 52-week high, however, on the Russell 2000. So those are the major 5 indexes plus the 2 equal weight indexes. Let's go to the VIX. The VIX staying low. And down today, even despite the late sell-off, and we did have the green close, staying above 12 and really trading in a tight range. And really, from a volatility standpoint, that's what we're seeing with the S&P 500 as well. USDR, this is the US dollar, lower on the day, plumbing the lows that were set back in May. So yen strength, there's some yen strength going on there. Bank of Japan supposedly doing an intervention to prop up the yen, but also that surprise CPI report corresponded with that dollar sell-off as well. Let's go to precious metals now. GLD, inside day, a little bit of a handle here near the top of this range. Nice tight consolidation there going back to April. GDX, gold and silver stocks, not waiting for gold to break out. They did break out yesterday and followed through to the upside today. Silver, not quite a breakout yet, and a pullback today, kind of not in line with what you saw in gold and silver stocks, but down 2% today was silver. Let's go to Bitcoin. Coming grudgingly off the bottom here. And it's got a long way to go. First thing we want to do is get back above and stay above this declining 21-day moving average. That would be the first thing that would get us interested back in Bitcoin. On to bonds now. Broad bond index made higher high relative to yesterday. TLT, not quite a higher high, but a higher close, and hasn't overcome the highs from a few weeks ago. That means bond price up, bond yield down slightly on the TYX. That's the long bond, and the TNX 10-year down as well, near the lows from a few weeks ago. All right, that's our inter-asset correlation. Let's go to the tail of the tape. Hit some highlights here. Day count, as I said, varies. We're really all over the place, and we're going to wait for that to sort out. Normally, we put the day count of what's going on with the S&P 500, and really, it's in a 3-day consolidation. But that's not the case for the Nasdaq 100. That's not the case for the equal weight S&P 500. It's certainly not the case for mid and small caps. S&P versus the 8 EMA, 9th day up, 29th day above the 21-day moving average. So that rally stays intact. Let's go to sectors. 10 out of 11 of the spider sectors up. ITB, as interest rates continue to pull back, really getting a bid. Biotech, semiconductors, and software to the downside. Silver and XLC because of Meta selling off today. That's a big weight in XLC. What did we do in-house? We bought a small starter position in HIMS that's got a GLP-1 weight loss angle to it and a nice move off of the 21. We got rid of our hedge as the selling at least before the last, we sold it early in the day in two pieces, once mid-morning, once slightly after lunch to close that um, before we had the sell off toward the end. So small loss on that, no big deal. It was designed as a hedge, and that's what they do. They keep us from selling some things that we might not necessarily want to. For me, anyway, there's a big psychological difference between putting a hedge on and taking it off than selling something and buying it back. Although net, it can be the same. Psychologically, for me, it never has been and probably never will be. And we did trim Meta on its weakness. So the bottom line on the day, PPI hot, but stocks don't care. Rallied broadly, but a weak big eight close will be something to watch as next week comes around. All right, let's go now to the 21 over 21 list. And there's actually 24 names in here because we bought three outside the list this week. We're going to go through them from strongest today to weakest on the day. And remember, you've got the weekly charts and the weekly return up here as a longer term reference. I'm going to focus on the daily. ARM consolidating nicely. APP undercut but reclaimed the 21-day moving average after just going straight up and breaking out and reversing. My experience, flat bases, that when you see it go straight up into the pivot without pausing, you get this pullback, or you just get it a little later. And part of that is the failed breakout. But also have to consider now these types of stocks that were running, the breakouts were failing when the big eight, or sorry, the RG8 was not acting very well. We want to watch and see if there's this is a $28 billion company. We want to watch and see if these types of names start to run up a lot stronger than their big cap brethren have been. APP next up is HIMS. This is what we bought today. It squatted a little bit, but this nice tight range and a move up out of the 8 and the 21. Good low risk entry there. Up next is Tesla. Undercut and reclaim the 8-day moving average. Yesterday, the sell-off was on their delay of their robotaxi day, but clawing some of that back right at that 250 level. SMCI, don't recall the last time we saw 5 to 8 days like this for SMCI. This looks like it's coiling for a move higher. We've got like a 1% gain in this since we took our initial position on that move off the 21-day last week. Coherent continues to just ride the 8 EMA higher since getting that new CEO. It absolutely has been a factor. Whether something changed with their business or not, I don't know. But a new CEO is one of the quote unquote N factors that's in canceling that we look for. Dutch Brothers, some 2 ugly days, but reclaim the 21 by the end of the week. Palantir, another one with the flat base. The consolidation is happening at the top of the base. Eli Lilly continues to just act like a complete champ. NVIDIA, rough day yesterday, got back some of it today, but also selling off late into the close. That was among those big 8 stocks that sold hard the last 30 minutes. Apple continues to look fantastic. Not a higher high today. Did sell off a bit yesterday, but never broke below the 8-day exponential moving average. Corning, we didn't add to this today. It did get a price target upgrade, but we're looking for some low risk entry add-ons to it. Elf up strong during the day. This is just a really volatile stock. I suggest not buying it on strength, but buying it on weakness. And it was up like 5% before late sell-off. Datadog holding the 21. Spotify, this is coming off the list with a break below not only the 21, but also the 50-day moving average. CrowdStrike, we still own a very small position in this, but it's coming off the list. Unable to get back above the 21-day, which has now rolled over. Weekly looks fine. Weekly, you're just in a 5-week consolidation here, although it did make a higher high and a higher low. So outside compared to the prior 4 weeks. May need an earnings catalyst, but that doesn't happen until late August. So really, it's consolidating the move up since its last earnings report and the addition to the S&P 500. Still the leader in the group, but down 4.7% on the week. GDX obviously staying at a new high. Amazon pull back hard. All the Jeff Bezos sells right above that 200 level were too much for it, and then it joined the selling on Thursday and tight range action today. Kava certainly coming off after about a 40% winner for us, showing no ability to bounce. That might indicate, and closing the week below the 50-day, this may indicate that it's time for a base. Although last time it closed below the 50-day, it was only one weekly close below it. A very nice candle the week of 426, and that led to the big run that it had that we participated in. TMDX tried to get back above the 21 today. We got stopped on this week. Could not hold the 21, so this will be coming off as well. Uber, a big move up yesterday on the heels of that Tesla delay of their robo-taxi day. Still in a very tight range, pulling back after that move up yesterday and holding the 21. CCJ, 2 days of consolidation after the big up day. Pinterest is coming off the list. It had several stays of execution, but certainly going off the list for next week. And Meta also going off. Ugly day yesterday. This is market just does this to you sometimes. Nice cup and handle, fake breakout, pulled back a bit, but not enough to hit 7% below the pivot. Then a big volume move up, little sideways move for a couple of days. Nope, nothing caught up in the sell-off yesterday, and even higher volume today, breaking below the 21. So out of the blue, you get sellers. Market definitely fooled some buyers with this big volume coming out, even bigger volume on the pull in. And I believe that's everything. Yes, that is. And with that, I'm going to wrap it up for the week ending July 12th. As always, like to get your feedback. Email don@revereasset.com. Hey, though, if you're going to email any of us, don't be an a-hole. There are gentle ways or kind ways of saying some things that you may not think are the best. We're not perfect here. We put our best foot forward every day, but people that we don't even know berating us for no reason absolutely is not something we're going to deal with. So be nice about it, okay? Don@RevereAsset.com, also on Twitter @DVandenbord. We're all up for constructive discussion. We will defend our methods of portfolio management because we've got a solid system here. Focus on the content, not on dumb stuff about what somebody's microphone sounds like, okay? The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, my partner Dan Stewart, he'll answer that phone number, or you can email him Dan@revereasset.com. He gets called Don and I get called Dan all the time. Reminder, our flagship portfolio is named GROTECTION. It has a dual mandate: participate in market uptrends. A lot of people derisive about tactical investing, thinking that, oh, you're always going to miss a move because now, well, we don't follow our opinion. We've got quantified rules that keep us in the market to override any opinions we might have. Things start to pull back, we start to pull back. Things start to get ugly, we get completely out of the way. And by ugly, I mean a break of this black line, the 200-day moving average. This is our sleep at night line. Typical drawdown from a high to the 200 days breaks is 12% off of the top. Let's see where we are now. We are 14% extended from there. And you can easily recover from this, but we won't be all in if we get down here. We will be selling some on a break of the 21, some more on a break of the 50. And then we kind of pull back on holding individual names and just let the market sort itself out. We basically let the leading stocks and leading sectors, the role that they play is to add to the gains when the winds are at our back. And we detail it every night on video. Most transparent advisor in the country. Give us a shout if you're interested, and tell your friends and family. The time to come to Revere is when your account is near an all-time high, so that when the market reverses, you can protect those gains. The time is not to when you call crying because you're down 30% because your advisor is a deer in the headlights when the market reverses. So with that kind thought, I'm going to wrap it up for the week ending Friday, July 12th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.